Hi believers, this is Amit from Waya team, and I'm here to provide a weekly bite and the road ahead in the markets. The domestic market has wrapped for the week with a steady recovery. Nifty clocked weekly gains of nearly 4.2% and logged its highest weekly rise in more than 4 years. The broader market outperformed Nifty as mid-cap index and small-cap index gained 7.7% and 8.6% respectively for the week and logged their biggest weekly gain in about 5 years. The weekly price action formed a sizable bull candle, probably indicating continuation of positive momentum going ahead too. Nifty even outperformed the global peers for the week due to the drop in the dollar index, encouraging capital flows back to emerging markets. Foreign institutional investors, FIIs, who have been minimizing their selling, are started to become net buyers, motivated by recent signals from the US Federal Reserve, which imply the potential for two interest rate cuts within this year itself. This has rekindled optimism in the domestic market. Technically, the breakout from 6 months falling trend line backed by a cross-sector participation augurs well for the extension of ongoing rally towards the level of 23,800 in the coming weeks. However, the move towards 23,800 may not be in a linear manner, as possibility of temporary breather after 1,000 points rally seen over the past 5 sessions cannot be ruled out. Hence, rounds of volatility amidst tariff-related uncertainties should be used to accumulate quality stocks as strong support is placed at 22,600 Nifty levels. Let's discuss the green shoots observed in the markets. The Indian stock market is at a turning point and several key catalysts could shape its direction in the coming months. The RBI's recent 25 bips rate cut, with another expected in April 2025, could boost corporate growth and consumer spending by making borrowing cheaper. That's the reason we are seeing banking and NBFC stocks showing strong traction. Foreign investor sentiment is another big factor. FPIs, foreign portfolio investors, have withdrawn $29 billion since October 2024, pressurizing equities. If major global central banks ease rates, foreign money could return to Indian markets. Upcoming corporate earnings will also be crucial. Investors confident could rebound if financials and consumer-driven sectors report strong Q4 results. We have to really keep eye on Q4 results. While we believe Q4 results are expected to be mixed, investors should stay cautious. According to ICRA, it is projected to see 7 to 8% revenue growth in the coming year, driven by revival in rural demand and increased consumer spending. A strong Kharif harvest and favorable Rabi season outlook have boosted consumer-driven sectors, but we need to wait for Q4 results to confirm. We will let you know how Q4 results are panning out. Let's take a brief view of what can go wrong and cause further correction in the markets. US is set to impose reciprocal tariff starting April 2nd, directly impacting automobiles, pharmaceuticals, textiles, and steel, and India has one of the highest tariff rates. Higher tariff cost could hurt corporate earnings and slow economic growth, which is a huge concern right now and keep the market rally in check. However, diplomatic talks are ongoing and President Trump has hinted that India could avoid harsher tariff if it lowers its own. Even our Prime Minister Narendra Modi has signaled a willingness to negotiate, which could ease tensions. For now, uncertainty is already shaking India markets, with the Nifty fluctuating as investors react. We expect volatility until a resolution emerges, but keep an eye on the opportunities once the situation stabilizes. Concluding, in context of current global backdrop, it's hard to argue that a new decisive bull run in India markets have started or not. But in upcoming weak data of USA, like the US GDP growth rate of quarter 4, will reflect the economy's performance and offer insights into whether growth aligns with shifting monetary policy. impacting flow of foreign funds in India. Our PMS at Waya is doing pretty well and geared for the good growth in next 3 years. If you are interested, please message us at support@thewire.com and we will get back to you. The minimum investment for portfolio management service is 50 lakhs. That's all for today. Wishing you a profitable trading week ahead. Thank you.